G'day, guys. Thank you very much for joining us for another Catapult Wealth Market Update. Today, we've got Bill Keenan again. He's the director and founder of Bluebird Portfolio Services. Bill, Russia has invaded Ukraine. It's all over the news. There's obviously a human element to this. Our hearts go out to the Ukrainian people. You know, people's lives are being absolutely turned upside down. But today, we're going to talk about the effects on the market. But before that, can you just give us a bit of an introduction on what preceded this? What has caused Russia to act in this way?
It's good afternoon, Tim, and hello to everyone watching the video today. Look, I'll just show a quick share screen where I'll show a map of Europe, and that way I'll be able to give a better understanding to people of what's going on here. So if we look at the Ukraine region here and Belarus, clearly those two countries are sort of buffer zone between Russia and the rest of Europe. And if we look at these states here, there's the old Baltic states of Russia, Estonia, Latvia, Lithuania. They're all members of NATO. Poland's a member of NATO, Slovakia is, Hungary, Romania is, and even Turkey is. So for Russia, they believe that Europe and NATO are encroaching on Russia, and they've been able to influence the government of Belarus and Georgia down here on the southern border, but they've struggled to influence the government of Ukraine. And you remember that there's been a number of sort of revolutions or protests against Russian-leaning type presidents. There's been the Orange Revolution in 2004, and then in 2014 there was a Russian-leaning president of Ukraine that got ousted. And not long after, you remember Russia annexed Crimea in the Black Sea in the peninsula and started its rebellion or supported the rebellion of Russian leaning states to the east of Ukraine. So this has really escalated, I guess, since 2014. But what is clear is the majority of the people, particularly to the West, are pro-Europe, and they're not part of the EU as yet, and they're not part of NATO as yet. But the apparent voting is around 68% pro-Europe. So the current president has been European leaning, and that is the concern for Russia, that they haven't been able to control Ukraine, and hence this move into to invade Ukraine.
Yeah, well, it's a bit like the Cuban Missile Crisis, where the Russians wanted to move their missiles close to the US, and the US weren't having it, and so it's a bit of a similar situation.
It is in a way, and we saw in the news today about Belarus suddenly, not surprisingly, supporting Russia. And talking about, bringing nuclear weapons over to Belarus, which is probably more a threat, let's hope, than anything. But that's what it's all about. It's all about strategic reasons rather than the people. And now we're going to see what happens, what the people want. And this could turn into a fairly ugly situation that goes on for years, really.
So I know the situation is changing very quickly, but Europe and the US are building up troops. They're massing up on the borders of NATO countries, but there hasn't been any actual support as of yet. Do you suspect that the US will get involved here, or will they just be sanctions only?
The sanctions at the moment, I think the US is reluctant. From a home politics point of view, it's not popular for the US to get involved here in the Ukraine, but it's obviously a more pressing issue for Europe. So Europe is going to have to lead on NATO here, and it's going to have to lead on sanctions. And recently they did put some quite strict sanctions on Russia, but despite the headlines about banning Russia from the SWIFT payment system, it does seem that the larger banks like Gazprom Bank, for instance, are still able to access SWIFT. So in other words, Russia's still getting paid for the gas payments from Europe. That hasn't been cut off from that.
I remember seeing a video of Trump criticizing that whole situation of Europe essentially sending Russia billions of dollars despite them wanting to protect them against them. So, and it's interesting that the SWIFT payment system stuff, I think even before this, Russia tried to create their own system that wasn't widely taken up to avoid this exact situation. But clearly, Russia was well prepared to accept these horrible sanctions, and they've gone through it anyway.
That's right. I think the strategy for them is more important. They do have reserves, financial reserves, and as we said, they're still getting the money from Europe because it's still sort of winter. Well, I guess the end of winter over in Europe, and so they're not, they don't want to cut off the gas supply. But I am sort of wondering what happens in Ukraine if a war escalates. Wouldn't the gas pipelines that run through Ukraine be the key target for the Ukrainian, let's call them the rebels, if Russia puts in a puppet government? I mean, the pipelines would be at risk. So therefore, this is probably why you're seeing, even though there has been no actual disruption as far as we can tell so far to oil and gas supply, this is why you've seen the oil price today above $100, and commodities are generally rising because of the fear of that some of these commodities will be cut off over time.
So it looks like it's just going to be purely sanctions and maybe the US arms rebels, but potentially it's isolated to Europe, at least for the short term. What do you think actually financial markets are going to do in the next sort of 6 months? Because we've seen this before with the Gulf War and all those sorts of things. Generally, and we saw a bit of an uptick in the US markets at the end of last week after taking a dip. What are you expecting to see?
I'm expecting to see that we'll probably have a Ukrainian type puppet government put in place, and then it will be a matter of whether the people accept that or not. So, for instance, in Crimea, it was accepted, but these are Russian-leaning states, that the Crimea and the eastern states. The big problem is 68% of the population, the majority of the population, and to the west, and Kiev is to the northwest, want to lean with Europe, and they've been under Soviet rule for decades, and they don't want that anymore. So this could turn ugly, and it could turn into sort of like a resistance or a rebellion. And in that case, look, I still think from a GDP point of view, Russia and Ukraine's tiny. Russia's not that much larger in a GDP point than Australia. From a global economy point of view, they're only about, roughly 1.5% of global GDP. They're not going to make a big difference to the developed world. Their only real impact on financial markets is the commodity prices. And there are alternative supply. For instance, Iran could be brought back into the oil supply. Gas will be harder, but there are alternative routes. So short term, yes, there'll be volatility. Medium term, I would expect markets to get over it, and that there'll be a reversion to market fundamentals. It's not really affecting the US market apart from oil price at this stage. And US has its own oil and gas. Australia does too. It's the issue is for Europe really, and how do they get those alternative supplies? So if at this stage we would expect short-term volatility and then the markets to hold, find a base, and then start recovering during the year, because we've still got the positive story, and it's a big positive story, and that is of the COVID recovery from the COVID pandemic. That's still a major positive story ahead, which should be deflationary as we move throughout the year.
Okay, so basically it'll be kept localized to Ukraine and the European countries, but for the US and the Australian markets, it's probably a non-event at this point in time, and that's what we've seen so far. But flowing onto that, I mean, one of the big things that people are talking about is stagflation, so a period of high inflation, which is probably helped by things like petrol prices going up, which is what the effect we're seeing, but low GDP growth. The US was pricing in 7 rate rises this year, but given that there is a little bit of concern on growth, do you think this is going to have an effect on what the Fed will do?
Yeah, look, I think it'll just water down things a little bit. I think they'll be a little bit mindful of the growth risks from higher inflation, in the sense that if you've got higher oil prices and higher transport costs, higher input costs, increasing rates is not really going to do much about that. Rates is only going to affect demand. You're not going to affect cost push inflation. Now, the central banks know that it's no point increasing rates just because of this short-term inflation spike from oil. Increasing rates not going to do anything. So they'll actually probably be a bit more concerned about the growth, particularly in Europe, that growth can stall because of their supply chain issues and transport issues, and that there'll be negative growth effects. And that's probably why we're seeing bond yields at the long end. So the 10-year bond yield are actually they've been falling despite the oil price above $100 a barrel. So that shows you that financial markets are starting to get more worried about the growth outlook than the short-term inflation. So you're seeing the short end of the curve probably rising, but the long end starting to come down, which is, I guess, a little bit more worrying when you start getting that scenario. So I think the central banks they'll probably keep that rate hike rhetoric going, but they'll probably pull it back a bit.
Yep. So that was one of the biggest fears going into 2022 was the interest rate rising environment. But hopefully the central banks maybe even just pause and say, okay, well, maybe we'll raise it once or twice and then see how it goes. And so far, financial markets have held up quite well. And so it seems like as long as this is localized, markets should be stable and should be okay.
Yeah, it's a good point you make. If it's contained to just Ukraine and Russia, then it's not going to be a major impact on financial markets. But the key link is obviously oil and gas and some of the metals, of course, like copper, aluminium, nickel. So if they start getting disrupted, then there is spillover effects into the global economy, mostly for Europe. But our financial market lead comes from the US. The US is only really going to be affected here by higher oil prices at this stage. They've got their own gas, as I've mentioned. So given the US is our lead, we'd be sort of saying that, it'll probably settle down after a little while. But there is an element of geopolitical risk at the moment, which will probably come out of the market over time. So it should... Basically, we're cautiously optimistic. We expect a muddle through type situation. The correction could continue this quarter, but we'd expect the next three quarters to be better prospects, particularly with inflation. That should be starting to come off with the COVID recovery we'd expect.
Yeah, and we've certainly seen that with more of a smaller conflicts, not the world wars, obviously, but in the minor military conflicts, we've seen a short dip and then it pushes all-time highs again.
That's right. This would only escalate if NATO starts getting involved in the Ukraine, which I doubt. They're more likely to be, perhaps, like you said, helping Ukraine arm, and that's about it. And holding their forces in all those NATO states and not encroaching on Ukraine. So that's the likely scenario.
Certainly after withdrawing from Afghanistan, it seems like the US are very unlikely to want to go back in again. So
no, it's not popular at home at the moment from a voting point of view. And I don't think that the US would get too involved. It's going to be Europe's mainly an issue for Europe. But the US would still be a little bit concerned about China aligning itself with Russia, which means that they're sort of supporting Russia's view for an invasion of a democratic state. So that would be concerning. So, the geopolitical stakes have risen somewhat with Russia and China aligning together here.
Once again, thank you very much for your time, Bill, and our hearts go out to the people of Ukraine. And for any of you, if you have any more questions, please feel free to contact us. Thanks again for joining us.
Thanks, Tim.